Well, this week we got Netflix's second quarter results, and shareholders collectively hit the unsubscribe button, sending the stock down 8%. Is the business broken? Is there any value there? Let's see if we can figure it out. So their second quarter revenue is up 13.4%, and their third quarter revenue is forecast to grow at 11.7%. So slowing down, but no surprise given the size of the business. They forecast their third quarter operating margin to be 33.2%, compared to 28.2% last year. So the sales growth is slowing, but profits are still growing strongly, and this says to me this result is not a disaster at all. It was interesting to see that their revenue has grown 13.4% in the quarter, but viewing hours were only up 2%, so they're earning a lot more money from about the same amount of customer attention. So that's the subscription price increases, the ad revenue coming through, and I guess the question is, how far can they push that before the customers push back at them? Let's look at the bull and bear case from here, what needs to go right and wrong. If you're a bull, you want to see that Netflix global reach turning into their new growth channels and firing them up. They're looking at live sporting events, podcasts, gaming, and they're looking to make some AI savings on production costs and using AI to increase the strength of their recommendations to their existing viewers. Now, if you're a bear, you'd be concerned that Netflix needs to invest in expensive sporting events to keep spiking up their user base. And you'll be hoping that they come up with the next Stranger Things or Squid Game pretty quickly. And unfortunately, these things don't come out on a tap. So quarterlies are noisy, but we're long-term investors. We much prefer looking at the business engine, what's underneath the hood. So we took the accounts apart and had a look. And we saw that over the last 4 years, its profit margin has increased 14.6% up to 23.4% now. That's going in the right direction. And its asset turnover, always one we watch. This is how many dollars of sales it gets out of its asset base. It's improved 1.1 up to 1.35. So that's that big scale. You don't need to spend a lot on an extra customer if you're Netflix. The platform's are already there. You've just got to keep signing them up. Its operating return over 30%. When we see numbers like this, we get very excited. We think this is one of these great compounding businesses that we want to buy and hold for the long term. But as I always say on these videos, even the best business in the world can be a terrible investment at the wrong price. So we've got to do a valuation as well. And this is where it came a bit unstuck for us. We think fair value is about $38. The market price was in the mid to high 70s this week. So it's not in our buy zone at the moment. We think if you buy at the moment, you'd be locking in a return of just 7.7%. So not particularly compelling at the moment, even though it is an absolutely terrific business. We're just going to watch and wait patiently for this one. So no Netflix, just chill. So good luck with your investing. I'll catch you next week.